Shit. All right, we live. Testing, testing. So it's a decent lag. All right, go. All right, what's good, trappers? So we starting to do YouTube lives and do this weekly, at least 2 times a week. Um, Want to look at some trades we already got going. The goal is to do this probably Mondays, so that way we can look at the chart and figure out plays for the week. Because everybody who's part of my group knows I'm a swing trader. I like to hold my trades throughout the week and not just a day. Um, so we'll look at the trades on Monday, take those entries if we get a good position, if we get a good opportunity, and then on Fridays we'll close those positions. It could end up happening on Thursday too, but normally it'll be on Fridays before noon or before like 11:30 Eastern time. But yeah, man, we live. So first, I want to show y'all Mara. So this is my best play for the whole Q3, the quarter. This is the markup for this. All right. I probably should erase all drawings and everything first, but I'm gonna try and explain what you so you can get your eyes acclimated to my charts and how I do my markups. All right. So first in the blue, I'm gonna hide everything first. Let's go this way. hmm All right. So yeah, that's pretty much it. So these blue ranges, these are marking accumulation range. If it was red, it would be a distribution range for me. Meaning I'm anticipating. So for blue, I'm anticipating it to break out as bullish. All right. You kind of look at this structure. Now, if I hide the range, first I'm gonna hide the range. We'll bring it all back. All right. This kind of looks like a reverse head and shoulders. That's how some people would see this pattern. Here's the left shoulder. Boom. Here's the head, and boom. Here's the right shoulder, kind of created by like a somewhat of a double bottom. All right. Anytime you see patterns like head and shoulders, the pennant, what are some other ones people call them? Like the ascending triangle, descending triangle. Really, any of those patterns that people like to draw up with all the drawings and stuff to look cool. Really, those are ranges because you got to take it back. Always stick to the fundamentals of like what's the foundation of trading and price action and what's causing everything to occur. It's price action and volume. So and it's either accumulation or distribution. That's it. People are either buying or selling. And when you have sideways movement, that's a range. And then you just have to identify whether that range is bullish or bearish. And that's going to be depending on whether people are accumulating, which would make it bullish, or distributing, which would make it bearish. All right, so Mara is a play we got. I had it ranging. This is a selling climax. This is my automatic reaction. If you study Richard Wyckoff, you'll know what I'm talking about. So now I'm going to pull my ranges back up. All right, perfect. Yeah, because that's the first one. So first, like I said, this is my selling climax. Here's my automatic reaction. That's how we made our first range. And then how we actually get the demand zone and supply zone is when we get these deviations. So it deviated the low, but it didn't really make a lower low. It climbed back into the range. So that would be the bottom of the new range. And then if we get a deviation to the top or a short, it might get a short push to the top. And here's a short, right? It's a failure. So in that case, that's the top of that new range. So from here to here, so I'm gonna hide the other one. Boom, and that's how we get this. So essentially, this section down here is a demand zone, and this section here is a supply zone. And I'll draw it right now just for reference since we're in teacher mode. And then here goes my demand zone. So anytime price comes down in this region, I should be looking to buy or accumulate. Anytime price hits the upper region, I should be looking to distribute some of my money if I wanted to trade the range. But if I'm looking for the big move, for the big money as an investor or something like that, or maybe I'm a position trader, I want to accumulate. Boom, when it hit that low, boom, when it deviates and hit this low, deviates that low, I want to accumulate again. Comes down here, it didn't get that low, so maybe you might have missed this entry, but then went right here when you peep the double bottom, and it looks like a right shoulder as well. This would be an opportunity to accumulate because now All right, better. So Mara 19, go back to Mara, 1 hour, cool. So you can see the price came back up here, and you could have seen this as a rejection, right? Because price deviated outside above the range and then dropped back down. But once you get that strong demand that holds, and this is basically the staircase, right? Each level continues to hold. So here we could have took a range from here, set buying climax down to here, which would be about the low. We call this an accumulation range. And if this holds, then that lets me know it still is about to break out. This ends up holding strong. It tells you we got a lot of demand, which lines up with Bitcoin, the election, everything going on. All right. So we definitely got a breakout here. So my team already in a position. We've been watching this for a while. If you aren't in a position, this is a decent time to get it. And you see how I kind of got it set up. This is the stop loss. If you had took an entry, caught this dip or caught this entry here, you put a stop. We had our stop loss down here to see if price would, deviate to 50% of this range. It didn't end up holding right here. So now we can raise our stop loss to this level. So that tightens that increases our risk reward ratio. And then let's go to the 4 hour. Oh. So even if you aren't in a position you're trying to get into one, it's okay to. I wouldn't even call this a FOMO buy. You could get in here. We're taking the profit up to 22.8687, and then you put the stop loss, the same stop loss, right? So about 17.7375. And then you see that gives you a risk reward ratio or ratio of 2.98. So basically 3. That's a great risk reward ratio. So it's worth the risk. Take that trade. All right. What else we want to look at on here? That's pretty much it. It's straightforward. Oh, if you're looking for an earlier take profit instead of holding it all the way up there, right? You want to always have a couple profit targets so you can scale in and out. I had the fib, and I drew my fib based from the previous low, the previous range low, to when it made this high up here, and then we got rejected back down. So that was how I drew my fib. Price came down here to that 61.8 and 50% zone. That's the sweet spot. Ranging in there, demand holding, and it broke out. So this is using the fib. Go to the 4 hour. I got my take profit here. This is my sweet spot. So I use a sweet spot for the entry and a sweet spot for the take profit. And this is the take profit one, 44 to 61.8. All right. So this could be a TP1. This could be a TP2, depending on how many or however you want to split it. And then the last one up here, this could be a TP3. Those are my long-term take profits. All right. That's Mara. See what else we're going to do. Let's go check out Exxon. So we got some Exxon positions going too. You can see I got the fib. Let me change that. Wake up and hope this cold range my morning. It ain't no umbrella for the rain that's pouring. Wanted you here, but you went the opposite direction. All right, so on Exxon, we are bullish on this, right? We are bullish on Exxon. Oil is going to boom. There's war in Iraq. It's the fundamentals. Not Iraq, my bad. Iran and Israel are battling, just the Middle East in general. That's where all the oil in the world comes from for the most part. So this is going to cause a supply strain on oil, which is going to allow gas stations to raise their prices. And of course, the more profit they make. All right, so we're bullish on Exxon, bullish on oil. If you want to trade futures, I would trade oil. If you trade in options, we on Exxon. All right. You can see. So on the day, let's zoom out to the weekly. Do this from the top down. We had a huge accumulation range for a while. Like this from 2022. Just ranging, right? Ranging, trying to decide if this is accumulation or distribution. Right here is the clear sign. It deviated this low, which was the technically the selling climax, deviated that low, and then ran strong. You feel me? That's a strong run. Almost no bear candles in between. One right here. Maybe this is another one. If you pull up volume, one, just one bear candle. That means the fight was so uneven. Bulls was beating the shit out of the bear. So ran up. That lets us know it's a demand zone or an accumulation range. So then we were starting to look for entry. It couldn't even break down below the 50%. So remember how I was saying it's kind of like water rising, right? Like you could think of it like on a movie, like when people be stuck in a room and the water flooding in. You could low key see it like that. Oh, that's why. Hold on, my fault. Demand zone. All right. So what I was saying is you could see it like water rising. So the demand zone was small. It was down here. It ran all the way up to the top of the range, and then price came back down to retest the demand zone. Basically, the demand zone have rose. The water rose, and it's holding here. There's no air down there. You feel me? So got to go up higher. So price is now being held up by this demand zone. Broke out of the range officially, and we're currently making the retest. Right, this is where we can confirm. I feel strong about it. I'm confident that it's bullish, but just in case, you always want to kind of fight against your own bias, right? If I'm bearish on this, that means it needs to break below this area. So I would call this the range right here. Let's go down to the 4 hour though. Or the daily. Yeah, let's do the daily. All right, so bears had this bearish trend right here, came down to the 50%, couldn't break below it, and then price pushed back up. Bears tried to send it back down. So this is their retest. They're trying for the second try to break down below this 50% level. Can't do it. Got a strong wick right here. Bulls are too strong. So to me, this becomes an accumulation range within the range. Ranges within ranges, bro. You got to keep up. All right. So this is an accumulation range. So now this 50% is the new hold level. Price broke out of this accumulation range, comes back down to the top of it, can't even get below the top of the range, the accumulation range. So to me, that's going to break out. And then if I zoom in, we're on the 4 hour. I mean, the 1 day. Let's go to the 4 hour. Zooming in, getting closer to the elephant. All right, I threw my fib up from low to high. That swing, 50%. Price can't even get down to the 50%. That's how strong demand is right now. It got close, but it didn't hit it. And I also had a high volume 1 hour candle right here. So if we pull up my indicator, I'm gonna erase this one. This is the EMA. That's the 10 EMA. This candle right here, this large bull candle with high volume, is a high volume zone. So that is a key level that has to hold. It's essentially a strong area of demand. It's holding. The very top of it is holding. All right. So we bullish on Exxon, and this look like, you see this is descending, but I marked it blue because it looked like an accumulation range, or what you would call a bullish flag. So I think I'm anticipating price to break above this, come back down, and then take off. And this is the same structure that Bitcoin got going on right now. We'll take a quick peek at that just to show you what bullish flag look like. Wake up and hold this code with a little range, man. Hold on, bro. That's not the right one. Hold on. This is the one. All right. This is blue. So I could change these blue. Let's go ahead and do that just for this example. Accumulation range. Accumulation range. All right. So it's descending, but it's really bullish. Price ends up breaking up above it, and now we're anticipating it to run. This is kind of the retest right here, but run up even higher, break the previous all-time high, which is around 73.7K. Pull back, retest this area, and then take off. And all this is lining up with the election. You see, I got this election mark right here. This is when they'll start, the voting is done. We'll find out the day prior, the day after that, who the actual president is. If it's Trump, crypto's going to go insanely bullish. And so we got it going up here, pulling back, and then taking off. But we already in position. So this is what a bullish flag looks like, by the way. And it's the same thing. Even here, I had a high volume candle on the 4-hour time frame. Price is coming down to retest this area, but it's holding strong. So much demand down here. Price is just floating. All right. Back to Exxon. We went down. Let's go down to the 1-hour. Just zooming in, you can see price action is starting to go sideways, starting to curl. It wasn't able to hit the bottom. Like, see, it hit the bottom right, went up, hit the top, almost hit the bottom of the range, but couldn't really do it. Tries to do it again. It's basically a range. It's a selling climax now. Here's your deviation. So it's a mini range right there. Once we go down to the 15-minute, you'll see even clearer. 15-minute. Selling climax. Retest that. Basically, this is the head right here. This is the left shoulder. This is the head. We're currently making the right shoulder. The same thing. There's patterns. Bottom, double bottom. That's it. This makes your right shoulder. So it's a mini accumulation range right there within this accumulation range. I don't remember why I marked this Friday, October 18th. I don't know why I marked that. Let's erase that. But yeah, so that's Exxon. Oh, and then add on top of all of that, again, there's my sweet spot, 50 to 61%. Price couldn't even get down to the 50. It might still bring a wick down here and deviate and wick to 50%. But either way, this is holding strong, which is in confluence with our high volume zone we found on the 1-hour. So we're bullish on this. If you aren't in a position, the position look like this. Just say you took an entry now. I would set my stop loss. I wouldn't set it right below this because it could get deviated just for like a wick, strong wick. So just go a little bit lower. So I'll probably put it in the middle here. This is my sweet spot. 50% to 61.8%. Let's call this, I don't know, screenshot. Just use that one. This yellow box is our sweet spot. So price entering there is anytime it enters this box, it's an entry. But I'm thinking I don't think price will drop below the 50% of this. So put our stop loss around roughly 117.69. All right. And then our take profit. First take profit could be the top of the fib. So basically 1.88, almost a 2R. But really we want to hold it to bruh. Okay, there you go. Oh, I got 1/3. I got the 27.2 and the 61. I didn't mean to. Let's change that. That's a decent take profit zone too, but I don't want to. I'd rather hold it up to the 44. Let's erase that. There we go. So 133. They give you a 4.16. So it's just about time. This is a long-term play, a long-term swing. Got to hold it for at least 2 weeks, maybe 3. Looking at the weekly, it could perform in, yeah, it'll take maybe about a month. So that's a long-term swing right there. Then lastly, the GOAT, NVIDIA, however you want to say it.